Hey guys, welcome to the 10th of March 2020. If you've got money invested in the market, you probably don't feel great about yourself. It's down about 20% since its highs a couple of weeks ago. And I just wanted to quickly touch base. This is a quick and easy way to do it. So what should you do? Well, it depends on what you do. If you're somebody who's, trying to be in and out of the market, aggressively trading, I don't know what you should do. We don't talk to our clients about that, and I'm not here to talk to you about that right now. What about if you're somebody who's got money invested with lending, margin loans, borrowed money from equity, that sort of thing? Well, you're probably sweating a little bit, but again, we don't advise our clients into strategies such as that. So again, I'm not here to talk about that. But what if you're on a long-term journey with money inside or outside of super? You want to be our Your Wealth, Your Way clients, and we have an end game in sight. What should you do? Well, hopefully, I'm about to put your mind at ease just a little bit. As I mentioned, the clients on our Your Wealth, Your Way program, we have a few questions. How much do you want to live off when you retire? How much wealth do you need to accumulate? And are you on track? And we create this modeling which shows, where you're headed, and we base all of our assumptions on, long-term averages and what we expect may happen. Now, for instance, one of the things we need to understand about you is your tolerance to risk. If you're young, I'm 40, I'm young. If you're young and you want to grow wealth, you have the time frame to be over here in the aggressive column. In the aggressive column, it's Australian shares, international shares, and Australian property, all market related and all taking a hit right now. If you're retired, you might be down here, moderate, conservative, again, depending on your tolerance to risk, depending on what lets you sleep at night. Where you've got a lot of exposure to fixed interest and cash, so the volatility is not in those assets. But let's focus right now on clients that are, in this aggressive column, maybe on this balanced option, where they've got 75 to 100% of their money invested in the market. And as I said, it's down about 20% in the last couple of weeks. You probably don't feel great about that because you probably think, I'm losing money. But let me show you a couple of slides, okay? One, the aggressive nature has experienced 5 negative returns in the last 30 years. So this is the nature of the beast. We expect this. We know this is going to happen. If it's 5 in the last 30 years, 1 in 6, 2 in 12, 3 in 18, 4 in 24, 5 in 30 years are going to be negative. Okay, it's volatility. It creates, upside as well as the downside, but we expect it. We know it's going to happen. And if we know it's going to happen, it doesn't hurt so much or feel so bad when it does happen. What's the other thing we want to focus on here is the return that we're after. We're not after, last year's 20% every year. That's impossible. It's not going to happen, and it's unrealistic. But if we assume that we're looking at CPI plus 5%, what's CPI? It's Consumer Price Index. It's inflation. It's the value by which the price of goods go up every year. So if something costs $100 this year, it will probably cost $102 next year. It's gone up by 2%. That's CPI. So if we're looking at that CPI plus 5% in this aggressive column, we're looking for a return of about 7%. So we're not after astronomical returns. So they're the couple of takeouts that I want to bring to your attention there. One more important one is this bottom line, minimum recommended investment term. If you're in this aggressive column, you should have 10 years of future time that you want to be invested. And let me show you why. On this next slide here, this is a chart. That dark blue line takes us all the way back to 1950, and it's the ASX 200. Now, one thing that you'll notice is it's volatile. Okay, it goes up and down, up and down, up and down, up and down, up and down. Now, what they always say is it's up the escalator, down the lift, which is, pretty common. It takes a while to get up there, but it falls pretty quick, and that's what we're experiencing at the moment. But like I said, it's the nature of the beast. If your process is to be, whether it's your super, whether it's money outside of super, that you've got contributions going in regularly, let me give you a positive. As the market goes down and you're contributing money in the form of super, whether it's salary sacrifice, whether it's employer contribution, or you've got a process where you're building wealth outside of super and you're depositing money in monthly, you're buying new units at a cheaper price. Now, if you had $100 and it was $1, you buy 100 units. If you had $100 and it was 50 cents, you bought 200 units. And if it recovers from 50 cents back to $1, you've now got $200 worth where you only had $100 or you know what I'm trying to say, before. So there is a bit of a silver lining, in relation to all this. But as I said earlier, it's a matter of understanding the journey that you are on. The market is volatile. It's the nature of the beast. We're not looking for exorbitant, outrageous, unrealistic returns. We're looking for, if you're an aggressive investor, about a 7% return. But we know that there's going to be times when it goes down. It just is what it is. It doesn't feel great when it happens, but it happens. We are not here to try and time the market. We're not here to say 2 weeks ago was the time to get out, because you tell me when the bottom is. Is it already happened? Is it going to fall 50% like it did during the financial crisis? I don't know. I don't think anybody does. The coronavirus has, sent the world into a spin. It's all gone crazy. Today, Italy pretty much locked down their whole country. What is the result of that? I don't know. I'm only 40. I've never experienced anything like this before. But what I do know is that the market has always returned higher highs, from the lows that it's hit. It's the nature of the beast. It is what it is. I don't think there's too much to be worried about. But if you have any questions, you want to give me a call, you want to send me an email, you want to go through your situation, as always, happy to help. Please feel free to jump online, send me an email, give me a call, whatever it is. Hopefully that made you feel a little bit better. Let's just see what happens from here. Thanks, guys.